As the U.S. markets are currently closed, we can see Nokia's American depository receipts finish Tuesday's session, October 28, 2025, in an absolute explosion of activity. The stock closed at $7.79.5, a staggering jump of 23.24% in a single day, adding $1.47 per share. This wasn't a normal trading day. This was a fundamental repricing of the company, with volume hitting a massive 288 million shares, dwarfing its typical average. Now, if you glanced at your Robinhood app or SoFi Invest platform and just saw that percentage gain, you might assume it was a meme stock rally or a short squeeze. This is Nokia, after all. The expectation for most investors for the better part of a decade has been one of slow, grinding progress at best and frustrating stagnation at worst. It's been the perennial turnaround story that never quite turns. But what happened yesterday wasn't a meme. The reality is that the entire narrative from Nokia just got a $1 billion validation from the most important company in the market today. Nvidia stock. That's right. Nvidia, the undisputed leader in AI, announced a strategic partnership and a $1 billion cash investment to acquire a 2.9% stake in Nokia. This isn't about phones. This is about building the fundamental architecture for 6G and AI native networks. Suddenly, Nokia isn't just a telecom equipment supplier. It's a critical partner to the AI colossus. Let's establish the common ground, the story everyone has believed up to this point. For many, Nokia is still the ghost of the company that made indestructible cell phones in the early 2000s, a giant that completely missed the smartphone wave created by Apple stock. More recently, the bull case for Nokia was that it was one of the few trusted vendors, alongside Ericsson, for 5G network rollouts in a world increasingly wary of Chinese competitors. This was seen as a low-margin, high-competition, capital-intensive business. It was a utility-like stock, not a growth stock. You might hold it in a diversified Schwab Intelligent Portfolios account for its dividend, but you weren't expecting it to perform like Tesla stock. The expectation was simple: a slow, boring 5G vendor. The reality, which was bubbling under the surface even before Nvidia stepped in, is completely different. The data from Nokia's recent third-quarter earnings report, which was released just last week on October 23rd, already painted this new picture. The numbers were strong, beating analyst estimates with a 9% rise in constant currency sales. But the important part was where that growth came from. It wasn't from the legacy mobile networks division. That part of the business was actually down. The real strength came from network infrastructure, which saw sales jump 11%, driven by a 19% surge in optical networks. And who was buying this optical gear? Not just telecom carriers. Nokia explicitly stated that demand from AI and cloud customers now represents 6% of total company sales and a significant 14% of that high-growth network infrastructure segment. The narrative that Nokia was just a 5G company was already obsolete. The reality is that its most advanced technology was already being pulled into the AI data center build-out. This is why the Nvidia partnership is so potent. It's not a random bet. It's an acceleration of a trend that was already in motion. Nvidia isn't just giving Nokia $1 billion. It's selecting Nokia as its partner to build the AI RAN, the AI Radio Access Network. Nvidia is introducing its new Aerial RAN Computer Pro, a 6G-ready platform, and Nokia will be embedding this at the heart of its new AI RAN solutions. This collaboration is designed to fuse connectivity and computing, creating networks that are AI native from the ground up. This move positions Nokia not as a follower, but as a potential co-leader in defining the next generation of wireless technology, which will be built around AI services, automated drones, and augmented reality. For anyone doing their online investment research, the story has changed from Nokia versus Ericsson to Nokia and Nvidia. This news, of course, sent traders scrambling. Yesterday's volume was astronomical. Platforms like Interactive Brokers and Fidelity likely saw a massive influx of orders as algorithms and retail traders alike tried to get a piece of the action. The stock gapped up at the open and just kept climbing, hitting a new 52-week high of $8.19 during the day before settling at that $7.79.5. This kind of vertical move is often met with skepticism, and technically, the stock is now deeply in overbought territory, with the relative strength index, RSI, way up at 83.95. A pullback or consolidation would be perfectly healthy after a 23% single-day surge. But the institutions that just watched Nvidia write a $1 billion check are likely reevaluating their entire models. We've already seen analysts at Jefferies upgrade the stock to a buy, with JP Morgan raising its price target to $7.10 and Northland moving to $7.50. Those targets were likely based just on the strong earnings. They may be revised higher still. It's also worth noting the other often overlooked part of Nokia's business, Nokia Technologies. This is the patent licensing division, the crown jewels of its long history of innovation. In the last quarter, this segment quietly grew 14% and posted an incredible operating margin. This division is a high-margin cash flow machine, and its value only increases as Nokia's technology becomes more central to future standards like 6G and AI networking. This provides a solid financial cushion and funds the R&D that makes partnerships like the one with Nvidia possible. This isn't a company struggling for cash. It has a solid balance sheet and a €3 billion net cash position. This stability is why many Fidelity Wealth Management advisors and those building Fidelity IRAs have kept it as a speculative long-term holding. So what does this company actually do? Let's clarify the business for those who are new to the story. Nokia operates in three main segments. First, mobile networks. This is the 5G radio and base station equipment everyone associates them with. It's a massive business, but it's competitive and lumpy, depending on carrier spending cycles. Second, network infrastructure. This is the growth engine. It includes IP networks, routers, switches, optical networks, the plumbing for data centers and the internet backbone, and fixed networks, like fiber to the home. This is the division that AI and cloud customers are buying from. And finally, there's cloud and network services. This provides the software layer, like 5G Core, that manages the network. This segment also saw strong 13% growth last quarter. And finally, there's Nokia Technologies, the patent licensing arm. This new Nvidia stock partnership is a supercharger for all three of these core segments, promising to integrate Nvidia's AI processing power directly into Nokia's hardware and software. Looking forward, the landscape has been redrawn. The immediate risk is valuation and execution. After a 23% jump, the stock is no longer cheap on backward-looking metrics. Its price-to-earnings ratio is now elevated around 41, though its forward PE is a more reasonable 16. The market has priced in a significant amount of good news. Now, Nokia has to deliver. It has to integrate this new technology and turn this partnership into tangible contracts and revenue. This is a long-term plan, and self-investing requires patience. The reality is that 6G is still years away. However, the AI data center demand is happening right now. This Nvidia partnership gives Nokia an incredible competitive advantage in that market today, while also solidifying its roadmap for the next decade. The expectation was that Nokia was a value trap. The reality is that it just became a validated AI infrastructure play. It's a stunning shift. Comment below with your thoughts. Do you think this Nvidia partnership is the final catalyst Nokia needed to break out of its decade-long rut? The competition, primarily Ericsson, now looks to be on its back foot. While other companies talk about AI, Nokia is now directly partnered and funded by the industry leader. For those using investing sites to find opportunities, Nokia just went from the maybe pile to the must-watch list. It's no longer just about 5G. It's about the convergence of AI, cloud, and 6G, and Nokia is suddenly at the center of that conversation. In summary, yesterday's explosive move was not a glitch or a fluke. It was the market waking up to a new reality. The long-held expectation of Nokia as a slow-moving, low-margin telecom vendor is shattered. The reality, confirmed by a $1 billion investment from Nvidia, is that Nokia's high-tech infrastructure divisions are a critical component of the AI build-out. The company just secured a powerful partner, a strong new growth narrative, and a clear technological lead in the race to 6G. The road ahead will involve proving this potential, but for the first time in a long, long time, the wind is truly at Nokia's back.